thank you very much, Michael. I think that was very edifying for all of us, and we all learned a lot, and it's prepared us for our upcoming session. And I heard someone say that collaboration is the new disruptor. And I just want to point out that we had two of our hydrogen fuel cell producers who actually did a joint presentation yesterday. They worked together on that. And this is what we need to start seeing, is collaboration between competitors to actually move this forward. And I also want to point out something else that you mentioned, Michael, and that was there's the getting to the zero, and we're the starting at zero. And what we represent is a thin end of the wedge that creates the opening for the rest of the industry to come through. So we are the avant-garde of the industry, and I would like to introduce the avant-garde of finance. Our next panel will be led by Michael Adams of Ocean Assets Institute. He's an author in Shipping and Port Guidance, Sustainable Blue Economy Finance Principles for the UNEP-FI. So I'll let gentlemen, if you will take the stage, please.
All right, good morning. Thank you for all being here after such a full day yesterday and a wonderful evening. Thanks again, as Michael Parker mentioned, to Brent and Maddie for organizing a wonderful day and evening last night that will be remembered by all. So continuing on the points that Michael has made here, would you like to come up now? Because, well, you'll be part of the Q&A. Okay. So you can fire away at all of us, including Michael Parker, after we finish the next comments. So this session is about the systems change. What we're talking about here is systems redesign. I mean, the shipping industry, while perhaps still half of them have their ostrich heads in the ground, is to be commended for the change that it has undergone in the last several years, because this is not an industry that readily collaborates with others, that is open to change, and yet all this is being thrust on it, and there's been a response that we've seen through Getting to Zero Coalition, through Poseidon principles, through the charters that Michael mentioned, the cargo charter, and how the IMO is responding as well. So it is underway, and it's encouraging. And yet in this room, we have a lot of the younger, newer members of the industry, as well as the technology providers that are part of the accelerating the decarbonization trend. So we'll talk about how to finance systems change with tools like blended finance, new ways of structuring things, new ways for the traditional shipping banks to go into smaller sizes, earlier stages than they had done before. Because everybody wants a seat at this table. If you're not at the table of decarbonization and financing it, you're not going to be have much of a future. We think, I agree with what Michael has said there. So to start us off, Paul Taylor is the vice chairman of the Poseidon Principles, and he is also the global head and managing director for shipping finance and offshore at Société Generale. Paul, will you kick us off, please?
Good morning, everybody. So Michael very clearly set out the plan ahead to support the industry, but you've probably heard over the last day and a bit about Poseidon principles, but no one's probably yet told you what they are. So I'm going to try to explain why they fit into the decarbonisation process in shipping and how banks can play a role. But first, why? Why have we launched the Poseidon Principles? And the banks have a really major role to play in the decarbonisation process. We're just one of the stakeholders in this ecosystem of decarbonisation. And of course, we have all the others, the ship owners we look at who actually purchase the ships. But we have the ports, the fuel suppliers, the yards, the equipment suppliers. We heard many of them speak yesterday. And I learned so much because I'm not an expert in that area, but I realised what a role banks can play in supporting you guys. We look up to the regulator and the government to bring in clear, concise regulation to help the process. But of course, the banks are one of these stakeholders. And why can we play such a big role in this energy transition? And you start by looking at the actual finance that's being provided by the banks for ship owners. We've got about $450 billion of senior debt alone provided by banks to ship owners across about 60,000 or so commercial vessels. So we actually have quite a role to play in which ships are on the water. And we should care. As asset financiers, we really should care where our money goes and what the underlying assets are doing to the environment. So we really have quite a major role to play, and Maddie was talking about and Michael were talking about the power, the value of coalition. We shouldn't underestimate that. Very briefly, the banks that launched the Poseidon Principles set out to be aligned with the IMO. Michael mentioned the 50% absolute reduction level. We also sit between the IMO and all the other commitments that our banks have made, such as the Paris Agreement, the Katowice Agreement, etc., and principles for responsible banking. So we have to make sure that the Poseidon Principles are consistent with other commitments we make. And where the Poseidon Principles sit is that they can be agile. We can change the scope if required. And that's highly likely to happen after COP, when the IMO comes under pressure to be more ambitious, more aggressive. We can actually change Poseidon Principles and be more ambitious ourselves, so no doubt we'll discuss that. So what are they? And I'll read this. The Poseidon Principles are a framework for assessing and disclosing the climate alignment of ship finance portfolios. What does that mean? Basically, those signatories of the Poseidon Principles have committed to measure the annual efficiency ratio of all the ships individually that we have on our underlying portfolios. And we will publicly report and publish these results, not for each vessel, but our portfolio score. And what we're going to publish is the delta between our portfolio score and the IMO trajectory. That will become clearer in a second. But we're publicly reporting these figures in a transparent and consistent manner. These are the signatories today, 28 of them, as Michael says. The 28th being SACE, the ECA, only in the last couple of weeks. What you'll see there is there's a large European flavour, but we have some Japanese banks. I think it's 5, which is really great because there was a while when we didn't have any Asian signatories at all. We don't have any Chinese, and we don't have any Koreans. That's the missing piece, I think. Most responsible lenders are there, and it's a fantastic momentum, but we really, really need to break into the Chinese lessors and the Korean export credit agencies. That time will come. So there's 4 principles of the Poseidon Principles. The first one is assessment, and it's all the signatories have to assess our portfolios with a common methodology. We have to be accountable for what we do, and we're relying on the classification societies, the IMO standards that exist today, so we're not creating anything new, but we're being accountable for our actions. We've been transparent in everything we do, and to a certain extent, we're enforcing the principles. And what does enforcement mean? It sounds very heavy-handed, but it's actually a spirit of cooperation, really, with the ship owners. We have a covenant in the loan documentation requesting the data on an annual basis required for us to make our calculations and our reporting. It's a very light, heavy in spirit, light legally enforcement. And this is what we're calculating, the AER. Don't worry, I'm not going to go into a maths lesson here, but we're calculating the amount and type of fuel used by the ship owner on the ship rather on an annual basis, and we're dividing that by the deadweight tonnage of the vessel multiplied by the distance travelled. There's a slightly different measure for cruise, and it's based on gross tonnage. And we've brought in distance travelled this year for cruise, when last year it wasn't included. So I think the point to remember here is that the AER is one metric. It's used by the IMO. It was recommended by UMass, and we're going with it because it's aligned with the IMO, and that's the aim. It may or may not be the best one. There's others like the EEOI, there's the CII coming in, the EEXI. All these can be looked at. We can be agile going forwards, but we're aligning ourselves with the IMO today. So I do hear from time to time, oh, the AER is not the right measure. It's a measure, and it's the one we're going with at the moment. It's step by step. So bear with us. Let's not let sort of perfection get in the way of progress. This is worth spending a little bit of time on. This is how it works. The blue line is the trajectory that the IMO has. It's an interpolation of about 30 different trajectories showing the decarbonisation over time. The dots you can see, red and green, are an imaginary ship portfolio of 5 vessels. We have a few more than that at SocGen. But on this graph, there's 2 aligned vessels. They're the green dots. They're under the line. And you've got 3 red dots. They're misaligned vessels for this moment in time. And the gap between the dots, when you have a weighted average approach, and the line is that's the delta. That's what we're reporting as our figure. Now, you'll see that, of course, the trajectory falls, and it's likely to fall in a much steeper fashion after COP, when we get more ambitious. And what that's going to mean is it's going to be even harder to align ourselves with the trajectory. And you can see that over time it falls, which makes it pretty difficult to be aligned going forwards, because most portfolios are misaligned today. And this is why the Poseidon principles are really important, because it's genuinely about action, not me standing here talking. It's all about action, because the only way we can, I say we, the signatories, can align our portfolios with what the IMO is committing to is by a change of behaviour. It's by financing more aligned ships, greener ships in due course. Now, how do you do that today? It's really difficult. I was really encouraged yesterday by what I heard, but most shipping finance is on ocean-going vessels, long haul. And today we don't have those vessels, but the clock's ticking and the line's getting steeper already. So what we're doing, we have to embrace the transition today, even if it's not the long-term goal. We have to finance or refinance more aligned vessels and change our behaviour. So just to give you an example of what we've done at SocGen, it's not an advertising campaign, but we've done quite a few sustainability-linked loans, Poseidon principle-linked loans, where we link the pricing and the terms of the loan to the efficiency levels of the ship. That's become quite well known in the market now, not just for SocGen, but other banks too. We have financed some short-haul battery-powered ferries, tugboats. These are small deals. It's not true banks only want to do big deals. We want to be part of this transition, and that means starting small and growing big. And so we've closed a deal for $8 million in the last couple of weeks. That's not going to make too much money for anybody, but it's a very, very important transaction, and it's financing battery-powered vessels. So we have to change our behaviour and lend more money on more efficient assets going forwards. Otherwise, we'll be misaligned. And if we're misaligned for too long, the capital will go elsewhere. The banks will not support the shipping businesses. 2 minutes. Okay, so what we've learned from so far from the reports is that most banks are misaligned. This will continue for a few years, I think. It's not a linear process, it's volatile. And the figures are going to go up and down for the next few years. We can't expect to be aligned overnight. It's going to take several years before we can start really managing our portfolios and see how how they're going to go going forwards. Last slide, and I'm done. So how do we support true zero? Sorry for the wordy slide. Firstly, the banks who have signed the Poseidon Principles have brought climate alignment into every decision, every credit application. It underpins every decision that we're making going forwards. I'll miss the next one out. Yeah, meeting of emissions reduction targets is at the forefront of every discussion with our clients. We have more and more discussions now with our clients. It's very, very open and transparent. And this Poseidon Principles is helping that in that respect. Going forward, bank liquidity is going to go in the direction of clients who are committed to and have a strategy for 2050. And finally, this is a blueprint for other industries as well. Of course, we're looking at shipping today, but it's great, and Michael mentioned it earlier on, that the insurance industry, the aviation industry, the steel industry see the value in something like the Poseidon Principles, and we've been very happy to help them on that process, but we should be proud of that. But it's a short step, a small step in a very long journey. Thank you. Too long.
My good friend and colleague, Gregor Paterson-Jones, who runs his own firm doing advisory work for multinational governments, multilateral banks in the developing world and developed markets as well. A lot on blended finance and structured finance, which is an important part of the solution of what is needed to make all this decarbonization happen. So Greg, I hand the floor to you to tell us about blended finance.
So hi everybody. I spent most of my professional life navigating the nexus between what governments can fund, what concessional funding providers can fund, and what commercial banks, equity investors, and other commercial investors can actually invest in terms of the return and the security that they need to make the returns that they need to deliver. And I'm not a ship financing expert. Everyone in the room knows more about shipping than I do. Everyone knows more about shipping finance. But what I do know is a lot about the difficulties and the details of financing through public finance and private finance. And I've worked with very, very large facilities. The European Fund for Strategic Investment is probably the biggest one. It's a 100 billion facility that was funded through a guarantee by the member states, but also very, very small ones. For example, we're busy with a $6 million funding instrument in Fiji, which involves some of the local fishermen replacing their vessels. And the challenges are similar across many large and small sectors and countries. And if you look at the ship financing market, you look at the types of ship finance, obviously there are various types of instruments, and some are more, some dominate more than others. But each type of instrument has a specific structure, it's got specific requirements that over time has been put in place to meet the requirements of investors. And so, for example, when you try and introduce sustainable financing into these markets, you have challenges which go right down to the actual structure of the investment. So scrubbers, for example, if a ship is subject to a mortgage, there are restrictions in terms of the financing documents which make it difficult to finance without consent from the financiers. Again, for new purchases or new leases, green technology generally, especially battery technology, has a higher financing requirement. How do you finance that? And in some cases, you have a new technology which, because it is a new technology, because it is proven, the expected return needs to be higher from an investor. And how do you finance this? Now, everyone from a climate, I won't say everyone, but a lot of people who are not financiers, who come to the climate finance and say, just do it. We've got this obligation, we must just get there. The truth is that the devil is in the details. You have to deal with the detail of each type of financing instrument if you want to meet the requirements of private investors and if you want to make any progress at all. So blended finance can help, and the reason why you use blended finance is because you have requirements from private finance, and because these requirements are effectively set in stone, and that's not because private financiers are greedy or because they're inflexible, it's because they have requirements which are enforced on them by the type of finance they're getting. If your grandmother or your mother has a pension and she needs to pay her rent and buy food, you're not going to ask that pension fund to invest in something where there's a good chance they'll lose their money. It's simply the fiduciary duty of a pension fund to meet its return requirements. Don't ask a pension fund to change that, because in order for them to do it, they've got to compromise someone else in some other way. So where blended finance comes in is to find finance which is using public money or money which can be concessional and blend it by using the minimum amount of that money to make the greatest difference. And you do that by looking at the financing structure in each case and say, what's missing here? Why can't a private financier finance, for example, this battery powered ship? And the reason might be that in order to finance it, the financing, because it's more expensive, because it's a riskier proposition, the financing cost is higher, you need to stretch out the financing, but maybe the bank can't do that, or that there isn't enough debt service coverage, or that the revenue or the market that they're operating in, if it's a tourism market, isn't sufficiently certain. So how do you take public sector money and deal with those individual problems? And the secret is that you've got to first identify what those issues are technically, both legally and financially, and you've got to determine those, and then like a laser you've got to focus in on those individual problems you're trying to solve and come up with a blended finance solution. So you can either do it in the senior debt, you can do it in the mezzanine debt, you can do it through equity, or you can do it through a strip of finance where the public financier will provide some concessional capital, which either allows you to take the first loss, or allows you to take some sort of the interest rate, or allows you in another way to guarantee a portion of the default. And we've worked with a lot of guarantees. The European Fund for Strategic Investment is this very, very large funding mechanism which effectively allows the EIB balance sheet to finance, including shipping financing, finance banks, and finance other direct projects by providing a guarantee against the default of a portion of that portfolio, quite a high portion of that portfolio. And in fact, each member state then guarantees that fund, which guarantees the EIB balance sheet, which then provides more risky financing to a market which it previously couldn't finance. And it has now, as a result of the financing, including the other financing that's come into the individual projects and individual pieces of finance that they've done in the European Union, now finance in the region of 400 billion of financing across the European Union. That's a significant amount. Of course, this is infrastructure, it's also SME banking, but it's very, very, very large. So you can do it at scale, but you can also do it in very, very small cases. We're dealing with the Fiji government for the moment, looking at how they can promote the local fishing fleets and the local tourism operators to borrow money to replace their boats and make that repayable. Now, of course, the tourism market now is under a lot of pressure. It's very, very difficult. So there's uncertainty about revenues, but also the boats are more expensive. So they have to have a higher capex. And the way the Fiji government is looking at doing this is that they will provide a concessional rate to the ultimate borrowers by subsidizing the rate that the development bank provides to those lenders. So the development bank does the underwriting, it provides the loans to the ship owners, but the ship owners end up paying a much, much lower rate. It then becomes economical. One, it can be underwritten by the development bank, but then of course it doesn't compromise the commerciality of their businesses. So Paul talked about these capital market innovations that have come into the market more recently, which are sustainability-linked bonds and sustainability-linked returns and having some incentives. What we haven't seen yet in the shipping market is how to use public finance to provide some subsidies to these. And there's definitely a route for capital market innovation where a portion of the imperative or the obligation or a bonus payment can be made available to those borrowers who are meeting or extending themselves to meet certain climate obligations, and therefore getting some commercial benefit for doing that, or not paying as high interest rate. And that, I think, is one area where larger banks can work with governments in a way that's consistent with the capital markets. I'll leave it there. Happy to answer any questions. There are lots of examples of these types of financing in other markets, not so much in shipping. End off with one very good example. When I was at the Green Investment Bank, we were looking at financing the transition to electric buses. Now, it has been done to a greater extent, but the problem we were sitting with there was not a problem that the cash flow didn't service the leases. The problem was that there is a very big second-hand market for buses, used buses in the UK market. So top-tier authorities will sell their buses on auction basis to the lower-tier authorities, and there's a market value can attach to the residual. So when you get to the end of the life of the lease, you know what the value of the bus is. But if you don't, and there isn't a market, the value of that residual drops enormously. So suddenly you lose 20-30% of your capital value when you're providing a lease. And you can't do that. So we were looking at that stage to subsidize it. It wasn't possible because the Green Investment Bank had to provide commercial capital, but that's where the government could have come in and to accelerate a lease program for buses, or indeed for ships, can for a short term provide that. And the secret is to do that on a competitive basis, get private sector operators to bid for these types of incentives. Over and out. Thank you.
Thanks very much, Gregor. Do we have the video of our third panelist? Okay, I will introduce him, assuming we'll be on soon. Joining us from Norway is Oistein Jensen, who is Chief Sustainability Officer from Odfjell. So we have a large ship owner and a brave one who has, smart one, who has recently done a sustainable finance for their operation and moving towards decarbonization of their fleet. Oistein, welcome, and tell us about this sustainability-linked bond and loan, and what's behind it and where you're going with it.
Thank you, and I hope you can hear me. I'll share my screen with some slides, and hopefully I can answer your questions on that sustainable financing. So I hope that you can see that now. Thank you for the invitation, and I'm really sorry that I could not be there. It was just not possible for me to come for these days. I'll be around in Scotland on Saturday for the ICS seminar. So for those of you who are there, I'll hope to meet you. I think it's important that ZESTA and Ship Zero conference taking the initiative for such sessions like these. These are crucial for sharing information and sharing knowledge and find solutions also. So for us, the climate change is really on the top of our agenda here in Odfjell, and we are investing a significant amount of resources in making sure that we are in the forefront of the energy transition. And although this will take time, and we hope and believe that we will be one of the first deep sea shipping companies to reach the goal of zero emission, as we believe is the only meaningful goal. So zero is the only goal that we are looking at. But before we can go there, we need to go as far as we can with the existing technology. So I'll talk a little bit about that and the background and how we have done with regards to the sustainable financing. So in these days, I don't think that we should draw too much attention to the IPCC report, because that's on everyone's lips and is everywhere in Glasgow these days. But this sort of confirms what we have been stating for a long period of time, that there is a clear relation between the human activity and the global warming. So, the Synthesis report that came out a couple of weeks later gave also an alarming picture of actually how we are doing with regards to achieving the climate goals. So it predicts an alarming scenario for our planet and the atmosphere and the ocean, as you can see on this beautiful planet. So to succeed in the ambitions that we have going forward, we need to join forces. We need to collaborate on a broad scale. But what it also does, it gives us hope to see that it is possible to do something about it. The clear relation between the human activity, it's also an example that humans can do something about it going forward. So briefly about Odfjell. We are a shipping and a terminal company. We have a history of more than 107 years. From starting out here in Bergen, we are one of the leading companies and leading operators in our segment today. We are specialized in shipping and storing liquid chemicals, some of which are highly volatile and highly complex. The products that we transport are in use in many of the products that every one of you meet every day, from everything like water bottles, insulation material, paint, cars, food, pharmaceuticals, even in production of COVID-19 vaccines. It means that around the clock, in any weather, 365 days a year, we transport some of the most hazardous liquids through one of the most fragile environments, the ocean. And that is a great responsibility, and it's a responsibility that we take extremely serious. So we want to hand over both our planet and our business to the next generation in a very good condition. That is why sustainability and safety is at the core of our business. So we are just a small part of the pictures that you will see here. We are operating a fleet of about 100 vessels, and we in a part of the global fleet. The global fleet transport 90% of the world's trade, and it is a volume that it's hard to comprehend, and it's been addressed earlier by Kepaka. But what is important here is that we see that as our industry will be growing, because it's a growing demand. The OECD predicts that the demand towards 2050 will triple. So that means that the emission will also be growing. So our industry represents between 2 to 3% of global greenhouse gas emissions. And that means that shipping is also a part of the problem. But we are also the most energy efficient way of transporting large volume over large distances. That means that we are also a part of the solution. So how are we doing? How are the world doing? Well, we're not doing very well at the moment, but we have we have an opportunity to do something about it. So the IPCC report that came out gave an alarming picture of this. And the Société reports that includes the national determined contributions also paints a picture where we will see an increase. So we need to bend this curve, and we need to bend this very, very fast. And that's why, coming back to my initial point, that the only solution is zero. So we can do whatever we can with reduction, but with the growing demand, we cannot meet that by reducing. We need to go zero. So how is shipping doing? Well, in this prediction, you will see that with all the plans that it's committed at the moment, we will not be able to achieve achieve the Paris Agreement target. Our industry will continue to grow, and our industry's emission will continue to grow as well. So that's why we need to bend this curve, and we need to bend this very hard. And in order to do that, we need regulation, we need ambition, and we need market-based measures that works globally, as we an industry need to collaborate to make it work. And zero is the only solution. So we encourage the targets that IMO has set of a reduction of intensity, but the environment doesn't really care about intensity. It cares about the molecules that we release into the atmosphere every year. So we can continue reducing intensity by building bigger ships. So the only solution is talking about absolute reduction. So the IMO target of absolute reduction was set to 50% in 2050. We don't think that is enough. We don't think that reduction of 50% is enough. It will not solve the problem. We believe that the only solution is zero. So that's why we set an ambitious target. What we did is that we did a thorough analysis of our fleet. We did a review of every vessel in our fleet and looked at what can we do with every vessel to see how much we can reduce the intensity of the fleet that we have in our portfolio. And we ended up to see that we are able to reduce, if we do everything we can, it's possible for us to achieve 49%. And then we added that extra and said that we will be set a target of 50% reduction in intensity by 2030. But we also say that in 2050 we have to be zero. And in order to achieve that, we will probably need to have a zero emission vessel on the water before 2030. So how are we done so far? Well, we have done quite well. By using the existing technology in Odfjell, we have had a very good results from an energy efficiency program, and so far we have reduced our carbon intensity with more than 30% since 2008. That progress makes it possible to put weight behind our words. As a very first company in the industry, we have demonstrated this commitment to decarbonize by linking our climate targets to financing, and I'll talk a little bit about that later. So our efforts continue with full speed. We are currently developing a zero-emission tanker concept. We also work with our customers. We are working with the industry, innovators, technology companies on a broad range of stakeholders from legislation and NGOs and fellow ship owners and partners in the maritime cluster. So our journey on sustainable financing started about 1.5 years ago. And we looked at green bonds at that time. The challenge then was in a green bond, you need to, it's dedicated for use of proceeds. And we did not see that we had a clear project where we can allocate the use of proceeds for exactly that project. And then we learned that the company Generale, they had issued a sustainability linked bond. And that, which is not use of proceeds, it's a general purpose financing. And then we started discussing and looking into alternatives of how that could be developed. We started the dialogue with our arrangers, we selected 3 banks to start a dialogue and looking at how could a sustainable financing be done through a sustainable linked bond. We started that work, and last summer the ICMA principles came in place. We started that work before the ICMA principles came in place. We had and those principles. So we decided to link those with our targets that we have set, but those principles in the sustainability linked financing are quite clear. So they need to be ambitious, they need to be more than business as usual, and we need to be measurable. So what we decided then is that we prepared a sustainability linked framework. That framework is actually available on our website for those of you who want to see it, and we know that a lot of banks and other companies have looked into that. So the Sustainable Linked Finance Framework outlines our targets, and it also explains the trajectory that we want to achieve. And I'll briefly tell you about the highlights of that. So what we did is that we looked at several different KPIs, because it doesn't have to be an environment KPI. It could be a social KPI, it could be a governance KPI, and it could be all of them. But since we assumed that we would probably be one of the first, we wanted to make sure that it was clear and it was understandable for investors. So we decided, after a long work on different kind of KPIs, we landed on the AER trajectory. So we have achieved a lot so far, and we have set the target for 2030. And through that period, we established a sustainability linked finance framework, and under that framework, we can issue both loans and bonds. It's set up with a KPI on our controlled fleet, and it's related to the AER performance. It's an absolute number to achieve that. So the characteristics are, if we don't achieve that, there will be a step up on the redemption price. And we have also, the framework has been externally verified by DNV. And also the reporting that we do every year has to be externally verified. So there's 2 kind of conditions that we need to achieve. We need to be in line with the trajectory, and we need to also make sure that DNV supports that we have a plan, a viable plan that will take us to 2030, since the bond period is shorter period than the 2030 period. And it has to be verified. So these are the characteristics of that bond. So we launched that in January, and with a great success. It was substantially oversubscribed. We got a lot of new investors coming in. About 40% of the companies came there and signed up to the bond due to the sustainability link. We got companies that said that they will have stopped investing in shipping, and they wanted to invest in shipping because of the sustainability link. So sorry about this slide, but these are some of the points that we have and some arguments for us to do sustainability financing. We wanted to set ambitious targets and actions because we think that is risk mitigating for us, and it's good for us, and it's good for our business. So this is not compliance driven. It is a long-term business perspective. And with our high standards on ESG reporting, we know that our stakeholders, they wanted to see what we are doing. They wanted to make sure that when you're investing in an Odfjell, we are investing in a company that look for the future and will not have stranded assets. So our commitment to this has never been clearer, and we are linking it to the financing. We believe that is a responsibility and a commitment to sustainability, and that will make us more attractive also to financing, but also to other customers, investors, and the general finance market. And also we want to be support, as we talked about earlier, and previous speakers have talked about, having the collaboration, a broad collaboration. So we think that we have a responsibility to also be in the forefront on the sustainable market developments, including a broader and social environmental progress of this time of financing can provide. So access to capital has never been more critical now, as we're going to do this major transition going forward. So that is why we believe that sustainable financing will be important going forward, and we think that will be the new norm in the future. And I think that was all I wanted to address at this moment. We'll be over here for the Q&A. So with that, I'll stop sharing the screen and be available for questions.